Hi, this week's leading index is Stoxx 600, and as you can see that it traced out a side wave, primary wave 2 from 2015 highs as A wave, and then the WXYB wave and a sharp downward C wave to finish the primary wave 2. From there, from 2020 lows, it has completed intermediate wave 1, 2, and now is in a very strong advance in intermediate wave 3. And if we further analyze the subdivisions of intermediate wave 3, we find that wave 1 to 4 are complete, and now we are in the fifth minor wave of this index. So it has outperformed all other indices. European indices generally have seen very strong advances in this correction and global turmoils, which especially in Asia has been brutal. And we find that now this index is in the final stages of completing minor wave 5. From it will correct in intermediate wave 4 sideways, and a new intermediate wave 5 will be traced out. So this was to show you that how Europe is comparatively resilient to the global turmoil, and it has not been in a correction for a while, and so is the US, but especially Europe, and especially this Stoxx 600 index and DAX index of Germany have all outperformed the global indices by a wide margin. The S&P 500 index, in here you see that so far it has completed 1 and 2 waves of subminute wave of minute degree waves, and it is not yet clear whether this index completed this wave 2 here February low, but still will soon advance in minute wave 3. That's for sure. And if the alternatives, we find that maybe this up move has completed a minor wave 3 already, and then A, B, C minute wave to complete the fourth minor wave. From here, then S&P 500 will advance in minor wave 5 to complete the intermediate wave 3 on the upside. Now on the lower chart, we look at the hourly chart of S&P 500. We find that these subdivisions are pretty clear. 1, 2, 3, 4, 5. This can be completely counted as an impulse wave from this fourth wave of minute degree to this high of a minute degree wave, and then this green wave, and from there on it traced out second minute degree wave, and which finished earlier in the January lows. From there sub minute wave degree 1 and 2 and is subdividing into further subdivisions of this minute degree wave on alternate basis. Maybe that where I have marked the sub-minute degree wave 2 is actually a minute degree wave alternate count, which I have here in purple color. However, this index is still in an uptrend and will hit the all-time highs soon. That was all about S&P 500. Now moving on to Nifty chart. Nifty has broken the 0.382 fib level at 22,724 and is now headed to zero point 0.5 fib level at 21,606. With this, the larger degree diagonal count has been negated, and now Nifty may be showing more weakness in the coming days. And as you can see that Nifty has fallen from a highs of 26,277 levels from 27th September 2024 to now this week's low at 22,124. So no, this is a relentless selling for the past 5 months now, and as you can see on the charts, the count is now changed to ABC, where C wave may be tracing out a diagonal, or it may be tracing out a double zigzag. If C wave traces out an ending diagonal, then equality of A and C wave will be at around 21,800 levels, and if it happens to trace out a WXY double zigzag, then the 0.61 in target for the Y wave around 21,680 levels. So how would we differentiate whether it is a WXY or a C wave diagonal? The simple rule is that the fourth wave diagonal must overlap the first wave, and all the five waves of this diagonal should be in a decreasing length order, meaning thereby that wave 1 is longer than wave 3 and wave 5 is shorter than wave 3. So that will differentiate double zigzag and ending diagonal. So in the coming days, we will see whether a diagonal is formed or a double zigzag is formed. If it happens to be a double zigzag, then there is a possibility that Nifty may trace out a sideways triangle, because this fall would be too steep to be a complete minor wave 4. So that was all about the Nifty. And now we move on to the advanced decline line of BSE. The breadth indicator 5-day line is showing relative outperformance to the BSE 500 index. And for the market to move up from here, this advanced decline line should show continuous outperformance and form a bullish divergence in order to have some bullish sentiment in the market. So the next week will be crucial for the ad line to see whether it forms a bullish divergence develops or not. This bank index is concerned, we see that it has so far traced out an ABC4, but the price action thereafter is not very convincing. It has bounced in three waves and then almost coming to the lows of the wave C. If it breaks below this, then we may assume that an second ABC wave is forming, and that will be the WXY zigzag of the fourth wave, which may be the A wave of minor wave 4. So there is plenty of room for bank index to cover as far as wave structure is concerned. However, if A wave low, a favorably low is protected, then there might be a bounce and it may move up from here. To confirm that wave count, it has to cross above this V wave highs. So that was all about bank. Now Bitcoin, and as you can see on weekly chart, there is a sharp break from the upside levels, and it puts a doubt into one's mind whether this up move has completed the minor 5 and intermediate wave 5 as well. On the daily chart, it looks like the sharp break has not negated the count yet, but still we may find that the breakdown is quite comprehensive. Yet it should now quickly regain the lost ground and move up from these levels. So that is about Bitcoin. And on the upside, it may be an alternate wave 1 up, because from the intermediate wave 4 low, the advance is not very convincing that it is a completed intermediate wave 5. I keep my fingers crossed whether this is completed intermediate wave 5 or just a minor wave 1 up. So only the time will tell. Next is the crude oil. Crude oil chart has intermediate waves 1 and 2 completed. Now to the downside, a minor wave 1 has opened up, and this is a primary wave C down in crude oil, and it can have a slight sideways move here and then move down again. So that about the crude. And the next chart is that of gold. As you can see, it is in a small degree wave 4 and then a small degree wave 5 up will complete the minute wave 5 and minor wave 3. So far gold has pulled back from the small wave 3, and I hope this is a temporary setback and then it resumes its uptrend. Next chart is that of a CNR. As I had in the previous update labeled my chart and this dawn wave as minute wave 4, now it looks like that it has moved up in a 3 wave formation, and it may not be the complete fourth wave retracement yet. I will have to look for the evidence. It might be that it traces out a wave for triangle here before hitting a all-time low. So that's all for this week's update. Wishing you very happy weekend, good and happy trading to you all. As far as